Are we now at that point where it's going to turn around, finally? What's going on, guys? This is Yix here of Magnet Crypto and welcome back to another video. So today's video is mainly about volume, and also I want to cover one article, one recent news event that's been very important. Huge step forward for the crypto space. So actually, let's first start with that news report, and then we'll go into volume and where we are in the crypto market. So if you have not already heard, this came out today, so you might have not heard, but banks in the US can now offer crypto custody services, regulator says. So what does this mean? Well, it's pretty straightforward, um, that they can now offer crypto custody services. The OCC is letting all nationally chartered banks in the US provide custody services for cryptocurrencies. So that means all the big banks can now offer crypto custody services, which means that they can hold crypto on your behalf. As you can see, clearing the way for national banks to hold digital assets for their clients. Now, this might not be too good for the likes of Coinbase, but at the same time, they do have a lot of experience. They have a lot of credibility, so it could be the case that most people still stick with Coinbase, or even banks will use Coinbase as a custody provider. So basically, the competition is now going to increase massively. People that have accounts with the normal banks will now start to have access to cryptocurrencies. So that adoption, wave is now increasing. It's interesting here. You can see that the OCC, currently headed by Brian Brooks, a former Coinbase exec. Sometimes people forget the impact it can have when someone who was in the crypto space goes to government or any kind of official authority. They generally have a positive impact. Even some, I can't remember her name, but someone joined was voted into the US Senate, who's very pro crypto. Now, it might not, materialize quickly, but their influence will come to fruition at some point, and they will have positive impact. It's not guaranteed, but it's most of the time they do have positive influences, and they're also trying to pass another legislation, a national payment chart, which would let crypto startups bypass the state-by-state approach in terms of acquiring money transmission licenses if they provide payment services. And so now, as it said, they've got the all clear to basically work with crypto companies, which is good. There's going to be a lot more collaboration with the likes of banks and crypto companies. It gives them regulatory clarity, which is what we've been needing for a long time, and there's still a long way to go. But this will remove, as it said, the skittish feeling that a lot of companies have to work with crypto companies, because they could get into regulatory issues. So very positive. Yeah, so that was a big article that came out today. Very important, and it's going to take us forward by a massive step, because banks, are now able to provide crypto custody, which is, in terms of, removing barriers to entry, this is going to allow most people to gain access to crypto very easily, and it hasn't got that illegal label to it. Now it's perfectly legal. Still, again, a long way to go. There's more regulation that's needed, but this gives it that kind of green light, which is what we need. So let's get to the second part of the video, which is volume. Now, volume has been absolutely drying up in the last few weeks / months since the COVID crash. For the most part, you can see that it's trended downwards. We had an initial, basically what happened. Volume is absolutely important to break resistance. You need a lot of volume to keep breaking resistance, which is basically fuel. People buying, more money going into the market. And so if we don't have that, you can't break past resistance without that buying pressure pushing you through. And so we've been missing this for the last, couple of months. Um, what happened after the COVID crashes, even though volume was generally low, slowly trending up, obviously, since we are correlated to the stock market, that crash led to actually a lot more liquidity and volume being picked up. Maybe as we broke past this, area of support, a lot of liquidity was, picked up, a lot of buy orders, and so you can see that the volume massively spiked in this area. Hence why we were able to come back straight back up into previous levels. But since then, volume has now been drying up massively since this area, and it's gotten to a point now where unless this line of resistance is weak, which it's not, this kind of 10K area requires more volume to really break through. So it could be the case that we might just break to the downside, maybe as far as this kind of 7,500 region, to pick up some more liquidity, some buy orders in this area, because you can see this acted as support for quite a while, acted as resistance. So this area is quite important. Could be the case that we have to go back down there to pick up a lot more fuel to break past higher. That could be one possibility. The other one could be just the fact that we've been bouncing between this symmetrical triangle, and then we just burst through, as a lot of times it acts as a continuation pattern. So it could be the case that we now just break through. But this lack of volume is quite worrying. And you can see that in the altcoin chart as well, or most charts. Again, you can see that volume was increasing at one point early in this year, and that increase in volume also shows the increase in price. So they pretty much go hand in hand. Then we had that massive sell-off during the COVID-19 crash, and then picked up a load of liquidity and started to go up. But once we hit a certain level, volume starts to dry up again, and then we basically just crawling. We had a little spike, managed to get close to that 100 billion level, but again, there isn't enough volume to really make much movement. Unless the next point of resistance is somewhat of a weak one, then you can basically crawl past it with a little bit of volume. But when it's a strong area of resistance, as you can see, it acted as resistance, and even back here, you need more fuel to really break past it. But the good news is, in my opinion, that when volume starts to really dry up, it tends to lead to a big move. When volume dries up, it's an indication that there's going to be a big move coming soon. Again, it could be the case that we break to the downside to some region to pick up some more volume, some more buy orders, and then spike up. Or it could be that once we bounce in between pattern, we break up to the upside from there. I think that picking up more liquidity from a lower area is the more likely outcome, and then we spike straight back up very quickly. But it's a probability game. Looking at Ethereum, you can also see that you can see the rise in volume and the decrease in volume going hand in hand with price increase and decrease. So you can see here again, volume is increasing, leading to an increase of price, and once that volume drops off, not a lot happens. You have a small increase in price over here, and then volume starts to dry up and price starts to drop with it. And then there's a small spike in volume, but not enough to sustain a rally again, and volume start to really, you can see volume really dries up, which goes hand in hand with it, price decreasing. And then once that shift happens over here, volume starts to increase. Now, it could be the case that once we broke here below this major level, picked up some more liquidity here, or even in this area, and then start to spike. It could very well be the case because, you know, this was somewhat of a resistance level. So it could be the case, or it could be this region in general. And then it led to an increase in volume, which led to the increase in price. COVID-19 happened. Bam, again, we break below that area, which leads to more liquidity being picked up. Again, these wicks are included. And you have an increase in volume, leading to massive rally. But then volume starts to plateau and decrease again. And then you only get small, increment increases in price. So again, we are getting to the point where volume has really dried up. So it could be that we need to break back down to pick up some more liquidity. I have a feeling it could be that $200 region, $200 region if it does happen, and then we could maybe wick really, really below that, potentially even down here. It's a possibility. But I think we do need to pick up some more volume. Either new entrants get into the market, or, as I said, we'll break below and pick up some more liquidity from down here, from below the this level of resistance. Let's see what happens. But that's my theory. That's my thinking process. So let's see. Be prepared. If you haven't already done so, take a little bit of profit and wait for this to happen. Either that, or like I said, it could be that we are in a chart pattern, some cup and handle formation, and then from that point on, we get a massive spike upwards. But let's see what happens. That's just my thinking. Hope you got some value from that, and see you next video. Peace.